There's two things that price needs in order to be successful: space and volume. Space and volume. Here on the upper movement, there's no space here. Right. Another thing that would get what we like to there's another signal we like to look at, and it's called straight lines. If you look here on the MACD, the signal is very straight. Straight lines signal consolidation. Consolidation leads to a straight line. A straight line leads to a change in direction. Good morning, good morning, good morning. Welcome to Saturday morning price action class. Welcome to the Collective Trade House. Like and subscribe. It helps the channel out. All right, so we had someone request a couple of days ago to actually wanted us to do something with entries and exits. So what we're going to do today is we're going to do a little short class today, and those of you that are on YouTube, there are students here in class today. So we're going to talk about entries and exits and how to best figure out how to get in, how to get out. Okay, we're going to incorporate that on a beginning intermediate level. Okay, so one of the things that the best where we have to start out in the best way is for us to look at these charts in a way that the first thing we want to do with the order of operation, we want to first locate price. We want to be able to identify support, resistance, and structure. We want to be able to find increases or decreases in volume in respect to where we believe the trend is going. And of course, at the last, we consult indicators, but always keep in mind that price is king. Even though the indicators might be saying one thing, but price is saying another. And remember, the market is always right. Doesn't matter what's going on, the market is always right. Whether you think it's right or wrong, the market is always right. Okay, so let's take a look here. Let's do this. Let's do this. I like this. So this is USD CAD. Obviously, this is Saturday morning, so this is the way the market closed on Friday afternoon. So what we want to do is we see this tremendous upward movement. Well, not tremendous, but a good upward movement here. And it stalls here or respects this line of structure. So here is current price, or where current price was, right? So the one thing we want to ask ourselves is question 1A and 1B when we locate price. Do I have volume? Do I have space? The answer to that is obviously no. Space, I know I don't have space because I have an impediment here with this area of structure and this supply box. So this resistance area here, and remember, resistance area is a concentrated area of selling. So there was a concentrated area of selling trying to motivate price to come the other way. So now I have to discern whether or not I'm going to put my efforts in on the upper movement, or am I going to put my efforts in on the downward movement. In each case, wherever current price is, I have to look at what is the next line of structure. In this case, current price being here, if I'm looking at an upper movement, the next line of structure here is going to be this area of resistance, obviously. But then there's another line of structure that I want you to look at. And it's the previous candle and it's where this wick stopped. Here, this is a significant level of structure. Well, Derek, why? Well, because this is an area of price rejection. Price came here and pulled back. So what I want to do is I want to take this horizontal line and I'm going to put it here. So I know that I am not getting in before this level of structure here on the upper movement. Now I'll have another line of structure that I'm going to do at the top of this candle, or at the top of this the current candle at this wick. So I'm going to put this horizontal line right here. Okay. So once this is established, I know for sure that my entry on the upper movement is not going to come before here or here. Right? I pull the screen down and we already have an alert here. Right? We already have an alert for price when price arrives here. And that's what we would do. So now I'm looking at price coming back the other way. Well, if this is an area of rejection, meaning price is going to stop here and then come back the other way, where is my next line of structure? Well, the next line of structure, if I'm looking at a downward movement, would be yesterday's high. And then after yesterday's high is this flat top candle. Now, before we start talking about the flat top candle, I want to do something that I usually do, and pretty dogmatic about it. When price is at structure, even at an upper movement or a downward movement, I like to put the trend line in. So we're going to add a trend line here. Right? And keep in mind, the further away price is from this line of structure this is space. Space equals volume. Volume equals money. So in this case, if this is money, there's potential for price to continue here. But this current candle does not show volume at all. Matter of fact, remember, the larger the candle, the more money it is. Right now, there's no money here. So there's nothing at the moment that would convince me that price is going to continue an upper movement, because I have several layers of resistance here. So let's go back to this flat top candle. Flat top candles in a bearish candle only. Bearish are these white candles or downward movement candles, right? Flat top candles. Now, I think the trump cards in structure are flat top candles and flat bottom candles. Flat bottom candles will be these bearish candles, these candles with these green outlines. And I'm looking for a smooth bottom, flat bottom candle. And the reason why these are important is because of the fact that these candles signal either a start of a trend or continuation of a trend. In this case, this candle was a continuation of Big Boy right here. So we have to mark this because this is a significant element of structure. So current price here, yesterday's high, this line, this horizontal line that we put here, right? Next, this resistance line here. And all the while, I'm looking at flat bottoms of flat top candles. There's another element of structure here called consolidation. There's a line of consolidation where price is moving sideways. This is also significant for the upper movement, because when you have an upper movement like this and price is moving sideways, this is giving me an indication that price for the upper movement, or the volume or momentum for the upper movement, is dissipating, because the closer price gets to this trend line, the less volume there is for the upper movement. However, when this period comes, more money comes into the upper movement, and as you can see here, the space widens. But Derek, you know that this is an upper movement. Why'd you put the trend line here? I put the trend line here because if price is going to reject, the trend line is going to give me a signal that we could be anticipating a downward move, and which in case would also signal it is time maybe to enter the trade. So once again, well, here's the next line of structure. If price comes out here, is this going to be my entry? No. Is this going to be my entry? No. Is this support line going to be my entry? No. When price breaks the trend line, it could be signaling, especially if price enters in this area, it could be entering or signaling it is time to move in for the downward movement. And you hear me say the term downward movement because of the fact that this is not a sell until price breaches the 50 going in the opposite direction, or going past the 50 here. Okay. So I am looking at certain places where there might be structure. Looking to the left here, I have consolidation here. So I'm going to put another horizontal line right here. So here's my entry here. This is going to be my entry for the downward movement. And I'm thinking about what is the next line of structure after that. Currently is this support line here. So you guys, for the Super 25, we're going to go ahead and give another signal. We gave a few last night. And we're going to give an entry here. USD CAD EP for a sell. And that's going to be 1.38596. 1.38596. And that TP is going to be 1.38398. 1.38398. In my methodology about price action, which I think is the gold standard when it comes to price movement, especially at the beginning stages of your trading journey, because there are certain boundaries that are put in place here to keep you. It's sort of like the bumper guards at the bowling alley. Keeps you from going in the gutter if you follow the rules right. Okay? So one of these things that we talk about here is, what are the signals to stop me from getting in a trade? What are the signals that stop me from getting in a trade? Well, one of those things is, and what I think is the number one thing, first of all, the lack of volume, no money. There's two things that price needs in order to be successful: space and volume. Space and volume. So here on the upper movement, there's no space here, right? Another thing that would be, you know, we like to. There's another signal we like to look at, and it's called straight lines. If you look here on the MACD, the signal is very straight. Straight lines signal consolidation. Consolidation leads to a straight line. A straight line leads to a change in direction. If all, as the histogram is pointing out, all the money is in the upper movement, all of it right now, except this signal could be giving us indication that the money for the upper movement may be dissipating, or there may be a change in direction in regards to money. So if that's the case, I had that those things would stop me, especially if I'm just clicking on and looking at this particular pair. And if I'm looking at that and I'm going like, hey, I don't think I can get in here right now because I have a signal that maybe the momentum for the upper movement is ceasing. Okay. So we've recognized that. We put our EP for an entry for a sell here, and we've also given a TP. Now, there's some other things that you need to know. We know about locating price. We know about locating structure. How do I recognize increasing or decreasing of volume? Well, we touched on it a little bit here with prices moving up here, and there's consolidation here. I know if I draw a trend line and I have consolidation, and as this space starts to dissipate, I know that maybe the money for the upper movement is ceasing. So that's one way. Another way, we look at these two EMAs for a second. This green line is the 5 moving average. The 5 moving average is measuring in the last 5 days the average price for this particular pair. There's a nickname for that green line. It's also called the money line. Next to that is the 13 moving average, and it averages the price of this pair for the last 13 days. Well, these two combined lines also measure volume. So as you see price here in this example, here price comes here, touches the trend line. So here's a retest, and then price moves up here. Now, as you can see, these candles getting larger, the space between the 5 and the 13 increases. See this pullback here, and now you see the space between the 5 and the 13 decrease. Here's another candle where it even gets closer together. And then, of course, this money comes up and price increases here. So if I start to see the 5 and the 13 go straight, then I know that that a reversal is imminent. A reversal is imminent. So then I have to prepare by looking at the next line of structure, looking at significant levels of structure, and then finding out where is the space for me to enter, and do I have volume when I get ready to enter? Well, let's talk about the flip side. Let's say we were in this trade, right? And we saw this bearish candle pop up. Well, obviously there's some level of areas of price rejection here because the previous candle comes up and pulls back, and this goes to this level and pulls back. Derek, you said that, I want to look and see if the 5 and the 13 are going to come closer together. In this case, it doesn't. One of the things that you also need to keep in mind, and don't freak out about it, but EMAs, the histogram the MACD, the RSI, the ADX, all those things are lagging indicators, meaning that the signals are delayed. Could this signal be delayed? Could this movement of the EMA be delayed? And that's why we still see this wide berth here. Maybe. Maybe. Well, Derek, I don't see anything showing a decrease in momentum. How about the candle itself? Price comes all the way up here, then it pulls back. How about that? That's one. And then the second is the signal here on the MACD. This signal is straight as an arrow. This is a pretty good indicator that, hey, it is time to think about leaving. So what we want to do, and we can't demonstrate it today because the market is closed, at this point, I would put in a trailing stop at this point. So let's say I'm up 50 pips. And I'm looking at all this structure here. So we grade trades based on the probability of success. Do I have the probability that price is going to continue here at the moment? Based on the information I'm looking at, it doesn't look like that. So if I'm up 50 pips, I might want to put in a 5-pip trailing stop. So what does that mean? So once my trailing stop is activated properly, if price pulls back 5 pips, it's going to kick me out of the trade, but it's kicking me out of the trade in profit. So what's the difference between a trailing stop and a stop loss? The stop loss is set as it pulls back. There's no breaks, or even if price pulls or price moves ahead, that's fine. But if price pulls back, it's going to pull back all the way to the stop loss. The trailing stop is cool because it follows price. So if price pulls back 5 pips in this example, it's going to kick me out. Well, let's just say you are at work, you put in a stop loss on this trade, and then you have meetings and whatever. Well, if price keeps going and then pulls back, you're going to lose all those pips right up until the stop loss. And that's why I tell all my students that I teach, the best exit strategy when you're in profit is the trailing stop. The trailing stop is the best because it's going to secure however many pips that I want to secure. If I'm up 50 pips in this example and I want to secure 40 pips, then I'll do a 10-pip trailing stop. Or if I just want to, hey, you know what? I want to be chinchy. I don't want to give up more than 5 pips, and I just do it that way. The trailing stop is the best exit strategy. Best exit strategy. So let's look at another. Let's look at Euro GBP. Now, this is a little different, right? Not a lot of money here, not a lot of activity. So we do our order of operation. Number one, locate price. Here's price, right? And then 2, identify support, resistance, and structure. Well, here's my trading zone, right? Here is this demand box here. And here's the top of this supply box. That's my trading zone. And then I have a zone within the zone, which is going to be yesterday's high and yesterday's low. Now, price is at the bottom of the zone here between yesterday's high and yesterday's low. So the first thing I want to look at to try to help me discern whether or not I'm going to get in for a buy or a sell is I take a look at the money. I take a look at the candle itself. I take a look at the histogram and how it's measuring volume. I go to check to the ADX to see if it's trending. In this case, the ADX is not trending. And I look at the RSI. I don't look at the RSI for volume in this case until price is overperforming. But the RSI is also giving me an indication that, hey, you know what, this might be turning around, because if you look at these parentheses here in the RSI, this is the watermark. So anything above 50, price is moving in a buy. Anything below 50, price is moving in a sell. So the RSI is agreeing with current price. So I look at the money line, I look at the 13. They're very close together. Very close together. There's hardly any volume here. And you know what? On the MACD, there isn't any volume here either. So are we looking at price to move upward? So I tell people all the time, if you're looking to get into a trade, whether it be a buy and a sell, let's say we have looked at all the data and we have realized that maybe this is going to reject and go into a buy. Well, the first thing I want to do, I want to start looking at my different levels of structure. In this case, here's that flat bottom candle here. So I'm going to put a horizontal line here, right? And I'm looking to the left. I'm going to go ahead and put a horizontal line. So as it in proximity to price, there isn't anything, no flat tops or flat bottoms. So here we are. But I do have a line of consolidation. I could go ahead and mark that. And I do have a line of consolidation here. I could go ahead and mark that. I come up here. I have a line of consolidation with another flat bottom here. So all these areas of structure are signaling to me that I don't have space. And we've already marked this. I don't have space until price reaches here. And then I'm taking this. Once it enters here, my goal is to take this from here to the bottom of structure, which is this supply box here. Remember, a good trader knows when he's getting in and knows when he's getting out. And in order to do that, I have to be able to locate price. I have to be able to identify support, resistance, and structure. I have to be able to identify increases or decreases in volume. So this is just a short class for you guys on YouTube. Hit the subscribe and like button so that when new videos come, you can follow along with us as we go through this odyssey of structure. Y'all make it a good day.